All right. Welcome, everybody. We are live for another edition of Daily Rates Live with the Mortgage Calculator. We're going to be talking about our non-QM fixed rate second mortgages, very similar to HELOCs we talked about before. But we'll get started here in just a minute. We'll let our streaming go live to all the different platforms, and then we'll get into our presentation. So if you'd like more info on any of the quotes or examples we go over today, please get with one of our team members or drop a comment. We'd be happy to help you out. You can also just go to our website and get instantly provided some of the same rates that we're going to go over for today. But thanks everybody for joining us. Just give us another minute before we get started. All right, looks like we are live on the different platforms, so we'll get started for today. Welcome everyone. My name is Kirshi. I'm the president of the Mortgage Calculator. We are a lender that offers, of course, all kinds of different loans in our 35 licensed states. But one of the things we're passionate about is our non-QM programs, including our fixed rate second mortgage that we're going to go over today. So what we do every day is we'll go over the general mortgage rates on our website of all the different programs, and then we'll dive deep into some details on these specific programs with a very specific example. I'll even pull up an example list. So again, as I said before, if you have any questions or need to get a quote for yourself, our team of licensed loan officers will be happy to help you out. Please drop a comment or go to our website. Let me go ahead and get started for today. Switch my screen up here. And first, we'll look at the general 10-year treasury. That's one of the easiest items to look at here when we're talking about mortgages. This is typically the one that's going to track most in line with what we're doing here today. So you see nothing crazy. We've had a couple big announcements and a couple big changes there over the year, over the 5-day period. But as we always look at, we're still close to or at 1-year lows at the moment. So awesome news for everybody out there shopping. We have all of our amazing options that are pretty much at 1-year lows here across the board. So let's actually look into some of the live rates. So here are some of our basic programs. So we'll go through each one. This is using a similar example for all of them. We're going to use a single family home, a $500,000 purchase price, $300,000 loan amount, corresponds to 60% loan to value. Obviously, a lot of these programs can go much higher. This allows us to compare all across the different programs using a 760 estimated FICO score and an estimated 40% debt to income ratio. So we use all those settings here to compare all of our APRs and rates across our different programs for today. So all of our different partners just refresh their rates here. It is about noon Eastern time. So we do have some fresh rates here. Our conventional primary option here, typically what you think of when you think of a mortgage, a Fannie Mae or Freddie Mac conventional loan, rates starting today, 5.875, final APR 6.135, very similar to last show. FHA coming in today, rates as low as 5.25, and with the upfront and mortgage insurance, remember to always compare the APR. APR comes in at 6.141, so just a touch higher than conventional, which is pretty much expected for FHA. And we will compare that to our VA for our eligible vets and active service members and surviving spouses in some cases. VA is definitely a great option. You look here, the rates look a little bit higher than FHA, coming in at 5.49 today. But if you compare the APR, definitely some great benefits with the VA program for our VA eligible borrowers. APR comes in at 5.709 with the including the funding fee there for VA. So definitely an amazing option for our eligible borrowers. Always look at that VA option. And we always want to compare our USDA options. So USDA is only for properties that are in USDA eligible areas. Those are typically the rural areas of the country. And for our borrowers that are eligible for these programs and properties that are eligible, these are great options. Rates coming in at 5.125, final APR 5.791 with all the different fees included for FHA. So a little bit more favorable than FHA there, and definitely a little bit more favorable to conventional. So if you are looking in those areas, always check out a USDA option. And where we start to shine here are some of our unique programs, our non-QM alt doc primary options. This would be obviously full doc, but also things bank statements, 1099s, P&L programs, all the different options we have for non-QM for a primary home fall under this category. And rates come in today, 5.875, APR 6.145. So when we compare that to using a conventional loan, they're almost identical in this example, just a touch higher in cost there for a non-QM option. So amazing that our non-QM comes in at very similar or almost exactly the same as conventional. And using our non-QM alt doc options for an investment property, rates a little bit higher here, 6%, final APR 6.321, but we're going to compare that to an investment property for conventional. So our next row down here compares our conventional option for an investment property, and you see the rates are, again, almost identical. Rates as low as 6% for conventional, final APR 6.311, so just a touch cheaper than using alternative docs. Definitely a great option, again, for our borrowers out there needing to use those non-QM programs. And one of our favorite options, and we're going to go over one today as well, our DSCR, stands for debt service coverage ratio. No income or employment needed from our borrower. We simply use the estimated rents from the property to determine a DSCR ratio. This example includes a DSCR ratio over 1 and adds a 3-year prepayment penalty, which is pretty standard here for these investor programs, and allows us to have some amazing rates. You see our DSCR, even with a 3-year prepay, coming in at 5.875 in our example. And final APR 6.193, which means it beats conventional. Absolutely amazing. And we can add a 5-year prepayment penalty here. It doesn't quite change the rate today, but you see the final APR comes in at 6.145 when we add the 5-year prepayment penalty, which means it lowers the cost a little bit, and again, beats conventional, which is amazing. And we do have a no prepayment penalty option here. This is for our borrowers that don't want a prepayment penalty. That's always an option. Rates come in at 6%. Final APR 6.321. So when you compare that no prepay option, it is just a touch higher than conventional, but again, amazing to use our DSCR alternative income options. And our topic for today. So this is going to be our second mortgage. Oops. Looks like my connection reset. Hopefully you can hear me there. So our fixed second mortgage option here coming in at 7.875, the lowest rate option today. Final APR 8.168. But we're going to go into a detailed example today to push this to the maximum cash out, which is our typical request here from our borrowers. Now, using our fixed rate second mortgage, non-QM options for an investment property. So we can use obviously full dog bank statements and even DSCR here for our second mortgage investments. And we'll get into those details in a second. Rates coming in at 8.75 as the lowest rate option. Final APR 9.176. So we'll compare that here. This is at a low LTV. We're about to push it to the max here in our example. So as I do every day, I want to pull up a specific example. So I look at a listing here in the area. So I found this listing here in the Fort Lauderdale area. Very nice newer house. $750,000 price here. So this was a good example for a couple different reasons. But what I did here is I assumed that instead of maybe listing this for sale and dropping the price, as I went over in my example for HELOCs as well, a lot of times our borrowers may need some cash and may think they need to sell their home. The market may not be the way they want it, and we can propose this option. So in this case, if our borrower doesn't want to keep dropping the price, maybe wants to keep the house, just to do something else, we can use our non-QM second mortgage option. So I assumed a $400,000 loan balance here and pulled up some options to get some cash out. So at the max LTV here, our first example, using our non-QM option with 12 months personal or business bank statements for our fixed second mortgage, we can go up to 85% loan to value for this exact home. So in this example here, we see our rates obviously a little bit higher, but still more preferable than typically a variable rate HELOC. Lowest rate on 9.375 for 2.225 discount points and costs. And we can get that down to 0.85 discount points and costs at a rate of 9.875. So this is using bank statements option, which is a little more expensive than our next example. Here, though, you can see our first mortgage was $400,000, and we're going to get our borrower $237,500 cash out if this is their primary home, in order to allow them to maybe do some repairs or do whatever they need to do, and perhaps take it off the market, not have to sell. So the rest of this breaks it down. We're using personal bank statements, etc., and breaks down all the LTVs, pushing it to a max of 85. Now for our next example, a little bit better on pricing, it's going to be using full doc. So typically our borrowers that use full doc want to use just 1 year. So 1 year of tax returns, W-2s, etc. So we can use 1 year full doc, and we can again push that up to 85% loan to value on a primary home. And the rates coming in a little bit nicer here, 8.75 rate costing 2.375 discount and costs. And we have a par right here, no cost, down to a 9.5% rate, which again is typically preferable to a HELOC, and the fixed rate allows us to use non-QM options and keeps us at a fixed rate instead of a variable option. And now the coolest option that we have next is going to be for our investors. So when we switch this over to an investment property, if someone owned this property as an investment, maybe considering keeping it as a rental property or Airbnb or selling it, obviously is what their current goal is, but maybe they don't want to drop the price. We have an amazing option. This is probably our most requested option here at the moment, and that is our non-QM investor DSCR fixed rate second mortgages, and we can get cash out up to 80% loan to value, which is absolutely amazing for our investment properties. That's often typically more cash out than we can even get for a first lien in some cases. So great option for our investors out there. This is our DSCR option. Again, no income or employment, just the estimated rents from the property. And this included a 3-year prepayment penalty. We can bump that up a little bit or take it off, but this is going to be our most typically requested scenario. So pushing this up to 80, adding that prepayment penalty, the rates are still very similar to what we saw before, 9.375 for an investment property, pretty amazing. Points coming in here at 3.35, and the lowest cost option here, 9.875 rate, coming in at 1.725 discount points and costs. And you see the 80% loan value in this example gets us a $200,000 cash out. So perhaps that investor could put that property into service as an Airbnb or whatever they needed to do to capitalize on their investment. So these are amazing options, and again, are some of our most requested options. If you'd like to get a full quote, a full breakdown, please get with one of our team. We have over 400 licensed loan officers that would be happy to help you out, and we can loans in 35 states for the primary homes, and even some additional states for the DSCR investment properties, as they're typically closed as a business purpose loan. So thanks everybody for joining us, and good luck out there with your home shopping if you're doing a purchase.